Well, I won't take up too much time as we're under a tight schedule. In the morning, our CEO introduced the conference talking about the immense opportunities that we have in the Caspian, and talked about some, and then later we heard about some of the large projects, the billion-dollar projects that are now underway in the Caspian region. So there are billion-dollar projects and there are multi-million-dollar projects. There are startups looking for capital. I remember back in 2009 when we did an event in Baku, we had a company called Asmeco present, I think, one of their first presentations, and so I'm happy to. I think I saw them here today. So continuing this theme, the way we've structured it, we've got a very good panel.
Azerbaijan, I would say that it's been untapped market. A lot of interest in Azerbaijan since international firms and international financial institutions understand that there is a lot of capital in the country, there are a lot of opportunities, but the country been pretty close, I would say, that to international funding, except, of course, oil and gas, where the main funding went in. So I would like to talk a little bit about the business environment in Azerbaijan and what's going in Azerbaijan. So one of the main advantages, I think, of Azerbaijan is its stable government and economic policy. Of course, there's still a lot of room for improvement in these policies, but the policies were stable and predictable and consistent. Any international firm or financial institution willing to enter the country knows what risks are there, how to mitigate them, and they understand what their strategy will consist of. As we a lot discussed that Azerbaijan is rich with oil and gas. I mean, oil dependence of economy creates a lot of problems for the country, but at the same time, it creates a lot of opportunities. Flow of petrodollars into the country somehow penetrated to the population, and it created very favorable macroeconomic environment in the country. So there are very good opportunities in consumer-related industries, especially, I would say, in the financial sector, agriculture, or anything related to consumer is really booming in Azerbaijan.
We raised about purely equity for very small junior last 3 years, about $700 million for small companies in the space, both for Azerbaijan, Kazakhstan, Tajikistan, those three areas, and both on the London Stock Exchange, Toronto Stock Exchange, and privately. So what I thought about talking about today was give you an idea of the investor perspective of Central Asian energy stories, small stories, and really the hurdle to get access to capital market, equity market. The Central Asia is a bit like mermaids. Some people love it, and some people really hate it. And there is not much in the middle. I'll probably start with a quick personal story of, I think, the first time when I went to Kazakhstan. So I arrived in Uralsk, and we were due to be were expected by a small company with an airplane supposed to wait for us, and the weather was terrible. We are going to Akhundov, so we could not fly. So we had to adjust. So we took a car. We drove for about 12 hours, and we arrived in Akhundov. Next morning, we took in a small Russian plane without, any electronics to fly to the field. And because of clouds, difficult weather, we never managed to reach the field. We are following the wall of cloud, and we could never arrive there. So we were late by 2 days. We eventually visit that particular field. I think what it just shows, it's in that region to invest. It's really about expecting the unexpected, and everything takes longer.
My personal opinion is that every country should have their stock exchange. I think there is one in Kazakhstan. I'm not sure about Azerbaijan, but all the countries should have the stock exchange. And the companies which are big enough can attract the capital afterwards. Once they've achieved good results locally, then they can go and tap the capital markets abroad. Because in every country there are rich people. In every country there's national bank and reserves and big banks. They would like to use the capital and to invest into local economies, which in case of Kazakhstan and Azerbaijan, the economies are thriving. So that gives also a big push for the funds not to be stuck in the mattresses or put in a bank where you can get 1.5%, or I don't know, in different countries it's different rates of return. But if the companies are strong enough to go and look at the people in the country as partners, as co-investors, and they're prepared to share with them the results that the company is making, then we're moving towards the notion of national people's capitalism.
The interesting thing from my perspective, just to tell you what it is I do within JP Morgan, which is, by the way, the world's largest financier and underwriter of the extractive industries. So we have a lot of skin in the game, so to speak, in your business. And what we see increasingly in the capital market space when it comes to environmental social issues is that investors are asking for more and more and more detail around your environmental social performance, recognizing that certainly in the extractive industries, so not only oil and gas but mining as well, environmental social issues are a key part of your operational standards. They need to be. In the US in particular, what we've recognized is, I got some statistics here, 40% of all shareholder resolutions during the 2012 proxy season were proposals looking at either better sustainability reporting or better disclosure on greenhouse gas. Now these were two of the three key topics that came out. There's a lot of hunger for more information around how companies are managing environmental and social issues. You probably have heard of the United Nations Principles for Responsible Investment, or PRI. Now, PRI, again, represents, I think it's something like $34 trillion of assets under management, a significant chunk of potential investor appetite and shareholder capital. So out there, you're seeing a lot of demand from the buy side for more information on these issues. Now, what does this mean, and what are we doing about it? There are a few conversations going on out there that you should be aware of. One is the International Integrated Reporting Council, IIRC, which is actually looking at developing, as you would suggest, more integrated reporting, not only on environmental and social issues, but on financial issues as well. So in your annual report, you should integrate sustainability or environmental social reporting. In the US, there's an institution called SASB, the Sustainable Accounting Standards Board, which is actually going one step further and actually trying to quantify around some metrics what the environmental and social aspects are that should be reported by companies, and trying to actually quantify the impacts of performance on these metrics. Now, that is with respect to annual reporting. One of the gaps that we've perceived when it comes to actual capital market activity, whether it's bond issues, IPOs, etc., is a significant inconsistency in how companies are telling their story. Whether it's not being willing to be transparent about some of the issues, whether it's not understanding that the buy side is actually looking for further information on these issues. We're seeing, as I said, a lot of inconsistencies. So what we've actually done in response to that is we've led an initiative, reached out to 18 of our peer financial institutions, and come up with a document, which we're actually going to be discussing here on Monday with the London Stock Exchange, to say this is our view as underwriters or sponsors as to what companies should be disclosing when it comes to environmental and social issues. In essence, it's a handbook or reference guide, if you will.
Is in the current environment not to underestimate the degree to which investors very much look seriously now in relation to the whole sustainability and sort of social economic issues. It is something that if you ignore, you are losing a good amount of pool of capital which you could be requiring. As I said, from my side, is that one has to go into these into the transaction planning for success. If you choose to ignore these sort of issues, I'm afraid the reality is that you'll be joining the ranks of companies that you see quite regularly from the broader region who have gone to the market and failed.